Welcome everybody, Pharus Global live at 5. We are on episode number 16. Can't believe this. 16, that means we're going on 4 months of these already. Really exciting stuff. We are here live at Pharus Global headquarters, Pharus Plaza, 1859 Southeast Port St. Lucie Boulevard in Port St. Lucie, Florida. My name is Brian Hartman, and I am the president of Pharus Funding Partners and co-founder of Pharus Global. You can find us at pharusglobal.com, where we like to say we can help businesses from the cradle all the way to the grave or to the exit, whichever you think sounds a little bit better. Today we are in for a treat. We've got Will Gardner, client services consultant with Tax Saving Professionals out of Vero Beach, Florida. We're excited to be talking today about proven and legal ways for high-income earners to cut their taxes in half. Yes, I'm telling you, cut your taxes in half. So without further ado, let's welcome Will Gardner.
Hey, Brian, how are you?
Doing good. How are you doing today?
Fantastic. Couldn't be better. Getting ready for the holidays and take a little R&R, and just a great time of year. Happy time of year. I think in general, I think no matter what's going on in your life, it's a time to pause and be thankful for the blessings that we all have.
Well, I definitely appreciate you taking time out. I know that it's getting down to the nitty gritty here, but here you are, and thanks for being with us tonight.
I appreciate the invitation. Glad to be here. Very excited.
Absolutely. For everybody out there, if you have any questions or comments during the show, please feel free to drop them into your comments section wherever you're watching this, whether it's Facebook, LinkedIn, or even on YouTube. If you're on YouTube, please hit that little bell so you get future notifications of when we will be having more shows. We do the show every Tuesday night, with probably the exception of next Tuesday, although that might still be up in the air. New Year's Eve week might be a little bit hectic, but say hello, drop something in the comments, any questions, and we'll take it from there. So without further ado, let's get into it. You ready, Will?
I'm ready.
All right. So everybody's asking, who are tax saving professionals? Let her rip. Tell us all about you.
Sure. Well, the shortest and easiest answer to that is Tax Saving Professionals is a highly specialized tax consulting and advisory firm that exclusively helps high income and high net worth individuals to drastically cut their taxes by just using what's there in the tax code.
And you guys are based where? You're in Vero Beach, Florida. Whereabouts?
Yeah, we're based out of Vero Beach. We just moved to a new office last summer. We've purchased a building last year and remodeled, and so we're over by the courthouse, just one street off of 14th Avenue, where everybody who lives in Vero knows where that is. We've been in Miracle Mile for many years, and yeah, so we're located over here and getting comfortable in our new digs, I guess. We've been growing a lot over the last 5 years, and we were on the top floor of the Miracle Mile building, the Bank of America building, in Miracle Mile, and it's getting a little tight for us. So now we've got a lot more elbow room, and heck, we just hired two new employees just in the last couple of weeks, and more are coming. So exciting times for us, and yeah, we've been in business for going on 22 years now. So and thriving just simply means helping more people to save money. That's really what it's all about.
Isn't that a great thing to be able to come to work and say that you're helping people every day?
It really is. It's funny. I've had people that don't quite understand, what we do, in the sense of, I've had people say, well, you're helping very successful, wealthy people become even more wealthy. And I guess that's a way of looking at it. But, I'm a capitalist, and I find that successful people want to give back because they can give back. They create jobs. And from my perspective, what we're doing is helping people that are successful, that taken a lot of risk, whether that's opening a business, loans, Education, they've gone in debt many times and they've taken a big risk in doing so. And a lot of times businesses fail. We all know that. We know during this, this pandemic, what can happen to a business owner who've done everything right. So from our perspective is, why should someone who's gone through all of that, taken all the risk, is now successful and earning a good income, why should they now be punished for that? And in our mind is, we're not a no tax firm. We're not one of these firms that says, hey, we're going to put all your money in an offshore account and you pay zero and you're working the system. That's not the American way. Taxes are necessary. Taxes, you should, as an American, want to pay your fair share. But
Right.
That's where that sticking point is what is fair? What's a fair share? And in our mind, that if generally speaking, the average American is giving back 24% of their earnings back to Uncle Sam to pay for roads and buildings and help some of the needier people, that is a fair share. And again, wealthy people tend to give back anyway. So the more we can help them keep their money, they're going to reinvest it. They're going to give some of it away, more of it away, frankly, but they're going to create jobs, grow their business, drive the economy. That's how it works. And as a capitalist and living in a great country, that's the way it should be.
Couldn't have said it better myself.
I hope everybody on this is in business and understands that philosophy. It's yours. You've earned it. You've shown how to do it. Why take it from you and give it to someone else who hasn't demonstrated that ability? And quite frankly, again, I don't know that bureaucrats know how to spend money properly. So give them just enough that they need and make them work out tighter budgets and spend that money in a very fiscal manner. Stretch a dollar.
Yeah, absolutely. Keep more of it yourself, for sure. So, you talk about drastically cutting taxes of high net worth clients. Don't most successful people already have CPAs doing those things? I guess what makes tax saving professionals different than every other CPA firm?
Yeah, that's a great question. I get that all the time. What most people don't realize, at least most successful people who reach out to me or my firm, they have the same question. I've got a guy, how are you different? Well, I have to point out that if you're high income, if you're earning more than, $400,000, $500,000 a year, you're in what's called, everybody knows this term, the top 1%. And that in some circles has become a bad thing. You're one of the 1%ers. But
you're that bad guy that's 1%.
Oh my gosh, it's somebody who's built a business and hiring people and driving the economy and giving to charity. That's I don't see why that's an awful thing. Again, the most successful people didn't roll out of their bed in the hospital when they were born. Let's frame it that way. Just wealthy and successful. They worked hard for it. At any rate, just statistically speaking, the average CPA service is geared towards the 99% of America. That's just statistically speaking, one out of every 100 clients he may have is a high income earner. So it's not necessary for them to know all the same types of strategies. They typically have very few clients that earn 1%. And frankly, there's a huge difference in those two groups, the 99% of America and the top 1%, with regards to the tax code. The tax code has hundreds of items, deductions, provisions within it that have been put in over 100 years that can help high income earners, especially those who own a business, and can help them cut their taxes. It is essentially it's a way to promote and incentivize people to open businesses and reward their success as successful capitalists. And that's what it's there for. So you certainly, everybody knows you've got your marginal tax rates, and that just says your income's gonna be taxed as bracket, but then you've got all of these things in the code to implement. Warren Buffett has been on record numerous times saying that he pays taxes at a lower rate than his personal secretary. Now think about that. Think about those two incomes, and I don't know what he pays her, and I hope he pays her, very well.
Mm-hmm.
But whatever Warren Buffett's earning and whatever his personal secretary is, for him to have the lower tax rate, again, a lot of people, if you heard that about Donald Trump, everyone's reaction is, oh, well, he's a cheat. So how is Donald Trump a cheat, but Warren Buffett's not? Warren Buffett, it's been documented. He paid 11% in taxes in 2008, about 16% in 2015. I mean, he's not the only one. The IRS came out with a very interesting report back in 2016, so about 4 years ago, and it covered a 25-year span of the top 400 tax returns filed each year over nearly 25 years based on adjusted gross income. And that report breaks those returns down in a number of different ways. But what was fascinating, to me at least, is in the last 10 years of that report, the top 400 income earners in the United States had an average tax rate of 17.9%.
Wow.
So the 400 wealthiest people every year, not just 1 year, over a 10-year period, were paying taxes at an average less than 18%. And that means some of them are at that 2024, but that means others must be paying it, I don't know, 5-10%. So it just goes to show what I'm saying is that the tax code has these opportunities. They're there, and people in the know. They know that. And how do they know that? Well, they don't have a typical CPA.
Right.
It's no knock against CPAs. If I have a business, I'm going to my market. And if my market is 99% of America, well, that's what I'm geared towards. I don't need to know the 1%. That's really not my business model. And so, again, most CPAs have very few clients. Our firm, every single client we have is that top 1%. They earn between $400,000 and $30 million. So all we do is focus on ways to lower those clients' tax bills down. And all of those clients pay a lot in taxes. They all are paying six figures or more in taxes.
Incredible. Real quick, a quick shout out to Louis DiRamondo. I don't know if you've ever seen allhotdogcarts.com, but Louis is the king of hot dogs, making the carts. He's got like the Ferrari style hot dog cart out there.
Okay.
Probably can use your help. So might have a referral there in the future. But hey, Louis, thanks for joining us. So how do the ultra wealthy actually do it? What do they know that others don't know at this point?
Yeah, it's a great question. I mean, without taking a deep dive and having everyone's head spin with tax strategies and taking a few notes and then going back to their CPA and not explaining it right and getting very confused, just from a high level, I say this. Most CPAs don't know these more complicated things because they just don't need to. There's a misconception, and in fact, I mean, any honest CPA is going to tell you. In fact, I had a phone call yesterday with a CPA friend of mine up in Washington, D.C., and he refers clients to me, and we talk about, again, these differences and what we do and what he does and what other CPAs do. And there's just a misconception that if you have a degree in accounting or you're a licensed CPA, then everyone knows the same thing. The difference might be in reliability, how hard one works, how quickly they return your email, reply to your email, your phone calls, things like that. But generally speaking, they're all the same. And that's like saying all realtors are the same, all attorneys are the same, all doctors are the same, all football players are the same. Everyone's different in terms of ability and knowledge. And if you want to know things in the tax code, you've got to take the time, because these things that's not what's taught in accounting classes. What's taught are schedules, the very basic compliance things. And if you really want to know, you've got to take the time to dig in. And again, if you're busy just filing tax returns all day long, and that's your business model, go in at a low price, try to undercut the competition, get as many clients as possible. And I'm not saying that there's anything wrong with that business model, but you don't have time to dig in for more advanced things and find out what the Warren Buffetts of the world are doing. The Warren Buffetts of the world, the Donald Trumps, the Ted Turners, the Mike Bloombergs, all of these people, listen, they're not tax professionals. They're very successful people, But I guarantee you, and I know this for a fact, they hire tax specialists, experts who know these things. Certainly they have their accounting division of their business who's just filing the paperwork, the returns, the numbers. But they have the experts that are sitting there figuring out a way, figuring out the things in the code that are there to be used. And if it's there and it's applicable to you, it's in the code. Why not take it? If the speed limit is 70 miles per hour, why would you drive around doing 10? If the law says you could drive 70, I'm not suggesting you speed, but go ahead and go 60, 65, 70. We're all on the road. We know, and we certainly see the speeders, and we all, most of us all go, oh, you know, that guy. You know, listen, if it's the law, you do it, and I don't know why anybody wouldn't.
And unfortunately, in certain parts of Florida, you do have people driving 10.
Then, yeah, they must be getting bad advice. They probably have that CPA who won't let them take the home office deduction or claim their children on their tax return because it'll cause a red flag, whatever that means. Yeah, hey, listen, Brian, I mean, the fact of the matter is, and what most people don't realize, the tax code itself, as written, is only a couple thousand pages long, but that's a lot. But what people don't realize is over the years, when there's some question as to what the tax code means, and a taxpayer and their CPA does something or takes a deduction, and the IRS says, no, that's not the way it's intended. You can disagree. You don't have to take what the IRS says, and you can appeal their decision, and it goes to tax court. And the court then hears both sides, and they make a ruling. It's called a revenue ruling. And those have been going on for 100 years. And that then becomes a part of the law, the tax code, the court's rule.
Right.
They help parse what it is, because the tax code is vague. You know, it can be very specific. It's got to be vague in general. And so what happens is when you take the tax code and all of those revenue rulings and combine them, it's more than 74,000 pages of documentation. Now, so what does that mean? That's a big number, but I tried to figure this out. I went to the office and I went over by the copy machine. I pulled a binder of paper out, 500 pages, and I measured it and I did the math, right? So 74,000 pages of documentation. If you stack that on top of itself, it's 24 feet of paper, which is equivalent to a 2-story building. So anyone who thinks that their CPA, just the regular guy, knows everything there is to know, and then 74,000 pages of revenue ruling and everything, you're fooling yourself. And I'm not saying we know everything, but I rarely see another CPA who knows as much as our team does.
Awesome. That must take a pretty good amount of time to read all of that too.
I'd say our team right now is decompressing. It's the end of the year. We've just kind of wound up a very successful tax year. We've helped our clients save, tens of millions of dollars in taxes. But what happens is in a few weeks, they're going to be reading all of the new changes in the law and the tax code and sitting down and having meetings and debriefing and trying to figure out what's this mean for our clients. So yeah, they've got to dig in. I'm glad I don't have to do it.
Yeah, I was going to say that might be a little painful. I know that you said that you save tens of millions of dollars. What is the typical average? We talked about it before the show started, but what's the average savings that you see?
Yeah, obviously it's all relative. If you earn $1 million and you're paying, even if you were taking a few deductions, but you've got a federal tax rate of 35%, you're paying $350,000, and depending on the state you live in, you could have anywhere from 0 up to 13% in California. Our clients there are just getting killed. So it varies. It's all relative. If you don't earn a lot, you've got a smaller tax bill, and then there's the tax rates. Generally speaking, we can save our clients. We can reduce their tax bill down by anywhere between 25 and 50%. So just for our clients, just based on their income and tax savings, our average client this year is, by my projections, the average client that we have is going to save about $90,000 in taxes overall. Now, again, it varies, and most of our clients fit in that spot of earning $500,000 to $5 million, but certainly we've got a few. Again, the higher you go, the smaller number of people that earn that kind of money. But we've got several clients who earn 10, 20, $30 million a year. So it may even skew it a little bit, but it's all relative. I mean, the clients that I have that are earning only $500,000 a year, you know, if I can cut their tax bill by 30, 40,000, it's a lot of money to them. It's all relative. That's a lot of money to me, I know.
Absolutely. So you guys are specialists that know code better than a general CPA may. Are you also a group of CPAs, or what does your firm look like?
Yeah, it's a great question. You know, we are certainly a firm of CPAs, but we also have attorneys, enrolled agents, IRS enrolled agents, which is a special designation through the IRS. And we also have people who help with insurance and financial things as well, especially with regards, what they're focused on is, again, mitigating tax consequences. That's what it's all about. You know, our clients coming into our service when they meet our firm, they already have a team of people. They've got a CPA, they've got, you know, an attorney, you know, typically a tax attorney. I'm sure they've got a financial guy, sometimes more than one. They've got an insurance guy. What we find, though, is, again, most of those people are working towards the 99%, not the 1%. So there's that. And secondly, all of those people on our client's team, so to speak, have no relationship to each other. They've never met. One might be recommending something that's good for, you know, income, but also creates a big tax burden. You know, it can be conflicting, and it can do a couple of things. One is one action can actually cause another problem that you don't realize, and things can kind of wash out. Two, it can be very confusing to any person who's getting conflicting information, and then at that point, maybe they're not choosing to make any decision. They're just kind of stuck because they don't know what to do, which and often can be worse than making even you know, a decision at all. And what our team works to do is work with their existing team. We don't have to replace anyone generally, and really just have a team of people who all have this expertise and put together as many different strategies, pile them on, and really show you how to save money now and how to create savings in the long run and I always say not build wealth, but accelerate wealth exponentially. You know, if your plan is to retire with X amount of money, and you've got that plan with your financial person, if you can imagine saving 10% more of your income every year, adding that into the mix, knowing a few more advanced things, and then now we're planning on doubling that retirement or tripling that retirement, or spending it as you want now. As I said, grow your business, whatever you want to do, give more away. It's up to you.
Buy a plane.
It's very powerful. I got just a very powerful email from a client a few weeks ago. He's a plastic surgeon out in the Midwest. He sent a very nice email to our team talking about, you know, saving him nearly $200,000 in taxes this year, but because of the effective plan we put together, he knew that going in, was able to reinvest his money early in the year, not wait all year and have that, you know, that little war chest of tax bill. You know, everybody gets that surprise by their CPA in the spring. He said, "Oh, he had a great year last year, but guess what? We underestimated. You got to write another $100,000 check." With effective tax planning, this client was able to invest all of it, and he, from his words, increased his investments by more than $650,000. Wow. So again, his words, not mine, life altering.
Yeah, absolutely. Yeah. Just as a reminder, if anybody has any questions for Will or for myself, please drop them in the comments. We'll be happy to answer those as they come in, or just say hello to us. We're happy to say hi back. So I know you touched on this a little bit, Will, but do your team of experts actually replace their CPAs? Or in my opinion, I can see you guys coming in as a team effort with their CPA more than trying to replace, and potentially maybe even help the CPAs retain their clients as well, right?
Yeah, absolutely. And ideally, we're not looking to replace anyone. A lot of times the CPA has been, you know, client's been working with their CPA for 15, 20 years. Sometimes it's a close friend, a relative. Again, we're not trying to say that they're doing anything wrong. They're not. They're great at what they do. You know, I often use the analogy, Brian, of a general practitioner in medicine compared to a specialist. Almost everyone has a family doctor, a general practitioner. He went to medical school. He went to medical school. He knows, again, everything in a general sense. He's there. You see him a couple times a year. He keeps you healthy. He keeps you from getting sick. And if you're a little sick, again, he keeps you from getting sicker. But, whenever there's a major problem, he refers you to a specialist. He knows at a high level, I've heard of the procedure, I might have, but you know what? Go talk to Dr. So-and-so. Now, the specialist, then, whether it's a gastrointestinal physician, whether it's a neurosurgeon, whatever the case, they're not going to replace the general practitioner. You don't start going to the cardiologist now for your routine exam and when you have a fever and you need a prescription. That's not what he does. You have both. And there's no reason you shouldn't. If the CPAs, if you've got a great relationship, he keeps you current and compliant, and he answers your emails and phone calls in a timely fashion, you build a relationship, wonderful. And in many cases, I will meet CPAs that are a little skeptical when we first meet them with regards to what we do, our ability, and of course our intentions. Are we really just trying to take their client? And after a couple of years, they realize that what we do is real, what we do is safe and proven and effective. They continue to work with their client, and in many cases, those CPAs start referring other clients to us. We build the relationship. We're just out to help as many people as possible.
So it becomes a win-win in essence. You help the CPA's client, you help the CPA retain that client, and you guys are happy because you helped another client along too.
I tell you, I literally just got an email 5 minutes before jumping on this with you from a CPA, a longtime dentist in Colorado, and the email was from one of his clients. It said, "Hey, my CPA says you can help me. When can we talk?" And
it's awesome.
We're doing that tomorrow, and that's again that it's a win-win for everyone, and that's really what we're all about.
So you talked about cutting taxes in half, right? 50%, maybe somewhere between 30 and 50%. But you always hear CPAs saying, if you take too many deductions, it's going to raise red flags with the IRS. You're going to get audited, and I guess, is that true? And also, are your clients having to worry about dealing with a lot of audits as a result of it?
Yeah. Well, yeah, taking legal things in the tax code is going to create red flags and audits. Well, it must be true because my CPA is saying it. I'm sorry, that's a little sarcasm. It's got to be true. I still don't know where exactly this comes from, because my first question typically when I hear that is, well, who do you know that that's happened to? How many people? Because I hear it all the time, but I never hear any examples.
Yeah.
Listen, the more income you earn, the higher your chances of being audited anyway. If you just go to the IRS websites and just look at statistics based on audits, just the more you earn, the higher the chance, especially if you're a business owner. If you're a business owner, you're going to be taking more deductions. So that's a given. For people earning between $300,000 and $5 million, I want to say that the national audit rate is around 4.5%, and that's a big range. And I know, again, the lower end, the smaller the number. But to that point, if we're able to maximize deductions, help our clients to cut their tax bill down dramatically, and believe me, it's not like the IRS doesn't notice you're paying 30 to 50% less in taxes suddenly. You would think by that standard that it creates red flags and audits. I don't know. What would you think? Let me ask you this, Brian. You've known us a long time. You've known me. You know people in my firm. You know clients that we've worked with. You've seen the results. So if you knew the national audit rate for our clients based on their income is in the area at 4%, if red flags, that whole thing were true, what do you think the audit rate might be for our clients? Want to dare to make a guess? And anything you say really is not going to be a bad answer compared to the truth.
I would say it's in your guys' case, it's probably a lot less than 4%, the average.
Well, it's actually just under 1%. So again, where does that come from? Who's saying that? And my guess is two things. Is one, it's just the IRS trying to scare people. The IRS, their job is to collect money, not help you keep money. They are just a collection agency. They're the largest in the world. They're certainly the largest in America, but their job is just to collect money in order, to drive our economy. They've got goals that Congress sets every year for collections, because there's things called a budget. The other one is just, again, I think CPAs don't have the time or the resources to help their clients maximize all the reduction. Instead of saying that and being honest about it, it's easier just to say, listen, don't do that. You don't want to do that. I'm doing you a favor by not allowing you to do that. But again, we meet a lot of CPAs who understand what we do, and they tell us, if you're willing to do the work, document, do all of this documentation, guarantee the results, guarantee that my client will probably not be audited at all, and even if they are audited, you're going to defend the audit, not me or my client, then I welcome you. Please come help my client, and let me introduce you to other clients that you can help as well. Yeah, it's just not true.
It's amazing to me. Unfortunately, the opinions that are placed in the hands of these high net worth individuals sometimes can deter them from doing what can actually be beneficial for them, just because they don't know any better. It's a shame. So you said that it's rarely an occurrence that your clients get audited. So how is that possible? Tell us what are some of the things that you guys do to try to mitigate that as much as possible?
Well, first of all, you don't do anything that's outside of the law. That's one. Everything is in the tax code. Everything needs to be reasonable. It needs to make sense and fit. You don't try to stick a square peg into a round hole. And in terms of tax deductions or anything you're doing with law or tax or the government, it's all about documentation. Again, the CPA I was speaking to yesterday, it's listen, you don't want an audit. Nobody wants an audit because they can be a pain in the butt, but they're especially a pain in the butt to people who aren't documenting things properly. That's when the IRS agent wants to dig in, because he's got you. How are you going to prove if you don't have adequate documentation? It's just your word. He's not going to take your word. But if you've got adamant, very thorough documentation, and that's what you're providing once he comes and asks about something, I'm telling you, they're really just going to turn and move on to the next person. Again, their job is to collect as much money with as little effort as possible, as quickly as possible. That's what they're trying to do. So they're looking for the low-hanging fruit, the person that's just got a shoebox of receipts. If you're doing everything properly, you shouldn't have anything to worry about. And I would hope that at 22 years doing what we do, we built a good reputation with the IRS. Again, we don't want to see anything as, it's not a war, it's not combatants. We're all, in the same sandbox doing everything together. And you've got to do things the right way. That's really the easiest answer I have.
And just to let our audience know, you guys, while you're headquartered in Vero Beach, you take clients nationally, correct?
Oh yeah, I have more clients in California than I do in Florida, simply because of the state tax rate, I think. We've got clients, and I want to say 49 states. I know we don't have any clients in Hawaii right now, and it's not that we can't help them, but it makes working with them difficult with the time difference. We've got clients in Alaska, and that time difference can be a challenge as well. But it doesn't matter where you're at. It's all the same tax code. It's all the same. It just doesn't matter where you are. As long as you're in the United States, we can help you. And I've got people who call from Canada now and want to know if we can help. Unfortunately, I can't help them. We're not well versed in the Canadian tax code.
And industry-wise, you're pretty much industry agnostic, right?
We are. It doesn't matter. We certainly have a few niches that we've just kind of gotten into over the years. Obviously, physicians tend to make a lot of money, especially specialists. So, once we got a few clients, they started introducing their colleagues to our firm, and we go to a lot of dental, medical events. Same has happened with dentistry. We had some very successful dentists and dental consultants that started working with us, and word started to spread, and we kind of got a niche in dentistry. We are a recognized continuing education provider for the American Dental Association. So we're certainly proud of that. I think it goes a long way to talking about the validity of our tax strategies. They're in the code. So I'd say about a third of our clients are dentists, a third of our clients are physicians. I'd say the other third are a blend of very successful business owners, and frankly, just some high income individuals. You don't even have to own a business. There are certainly more opportunity in the tax code if you're a business owner, but it's not the only thing. If you earn enough money, there are a few things out there that can help bring your taxable income down a little bit, so you pay a little bit less.
Awesome. That's good to know. So getting back to the audits, because I know that's on everybody's mind every time we talk about what you guys do. So if someone's working with tax saving professionals and happens to be one of those lucky ones that gets chosen for an audit, what happens? Oh, we lost you. Can't hear you. Somehow, you could hear me? Sorry, everybody, we're having a little bit technical difficulties. You're on. It says that you're on mute on your screen. Let's see if I can do it from my end.
Okay, how about now?
Yeah, better. You're back.
I don't know what happened. I got a message that said something about the internet. I don't know. Something happened and the system muted me. Sorry about that.
That's okay. So we were talking about one of the lucky ones. If one of your clients gets chosen.
Yeah, it's our attorneys who handle the defense of everything we do. We don't do things and then run and hide. We back up everything we do 1,000%. We tell any of our clients that if you ever get a letter from the IRS, do not contact them. You forward that to us. We'll handle it from there. And again, we have 100% confidence in everything we've done. We do not lose deductions. And when you overwhelm a revenue officer with supporting documentation, they tend to go on to the next guy. And again, I hope we built that reputation with them that everything we're doing is sound and legal. But yeah, we only have a couple of clients even currently under audit out of hundreds. So listen, again, you don't want to have an audit. Nobody does. It's a pain. You don't want to get pulled over when you're driving, whether you've done anything wrong or not. You're like, oh my God, I got pulled over. So nobody wants to do it, but certainly, when you haven't done anything wrong and somebody's pulled you over, a lot of times you're just wondering, wow, well, why did you pull me over? And maybe you just got pulled over because, you got a brake light out and they're trying to be helpful. I don't know.
It still freaks you out. No matter what.
Concern with our clients. It's just a lot of, I don't want to call it fake news, that term that's out there, but I just don't know where it comes from. I don't.
And you guys, do you do any type of guarantee against it, or how does that work?
Yeah, actually, we guarantee our results. We put it in writing. What's I think unique for us is when we do an analysis for a client, we go through the tax returns, we look at all of the financials, and we kind of start looking at various strategies that are applicable that would work for our clients, deductions that they're overlooking, and we start putting together the plan. We're based on their income and their tax rate and everything. We can calculate what this will produce in terms of tax savings. What will their tax bill now be? And we're so confident in what we do, we guarantee those results in writing. We tell our clients up front, this is how much you can expect to save every year in taxes working with us, and we'll guarantee it. We guarantee it. If we can't achieve this by the time we say we do, we'll either refund some money or work for free until we do, and that seldom happens.
Wow.
It's pretty amazing, and it's just, again, it just speaks to our confidence in what we've been doing for 22 years.
That's pretty bold. I never heard of a firm that actually does a guarantee like that.
I've had people, I've asked people, ask your CPA how much he's going to reduce your tax bill by this year, and how much, whether he's willing to put that in writing.
Don't think so.
we do, and we're very proud of that, and it's fun. It gives us a little incentive to do the best we can, and we love to blow those numbers out of the water.
Awesome. So I've known tax saving professional for many years now, and knew some of your clients over the years, and I think even a couple that are with you guys now. So I guess the question is, why isn't every high income earner working with tax savings professionals to cut their taxes?
Well, certainly, we've got to overcome that skepticism. What I always say, Brian, is we're trying the best we can. it's a big country, a lot of people, and we're getting the word out, and we've been growing, and our client base grows year after year after year. We're helping more people. But yeah, it's give us time. I'd love to have the day where we've helped everyone, and there's no one else we can cut their taxes because they're all down paying a fair amount. Hey, that'd be a great thing. I mean, we'd be out of business, but it just means we know we've helped everyone in America pay their
everyone.
Everyone.
So with all of that, obviously, the ideal situation would be for someone to pick up the phone right now and call you and say, I'm a high income earner and I'd like to learn more. But also, who are some referral sources that you work with that could be reaching out to you? Who are good people to connect with?
Yeah, we actually I get a ton of referrals from existing clients. Certainly people hear about us. We certainly promote and advertise in various ways, but honestly, 70% of our new business this year, our new clients coming in this year, and I think even last year, it's about 70% of that is just coming from referrals.
Wow.
And yeah, to answer your question, is we get referrals from existing clients, but from CPAs, from people in the financial field who have high income individuals who, again, we're looking to mitigate tax consequences. So I tell our financial referral partners, listen, if your client had 10% more of their income to reinvest with you, how good would that be? It's a win-win for everyone.
Right.
If you make a lot of money, we can help. That's really just what it comes down to. It doesn't matter who you are or what you do or where you are in the country. It just comes down to that. If you're being taxed, if you're losing, I typically say more than 30% of your income to your silent partner, who I refer to as Uncle Sam, whether you know it or not, you have a silent partner. He's Uncle Sam. You do all the work, and he takes his cut.
I never heard of that uncle. I
Yeah.
have one of those in my family too.
Yeah, everywhere. But yeah, if you're losing more than 30% of your income, 30, 35, 40, 50% if you're in California, it doesn't have to be that way. You don't have to keep getting punished. You work hard for your money. It's your blood, sweat, and tears and risk. You deserve to pay only your fair share and keep more of what you earn.
Absolutely. Awesome. I really enjoyed this. We've gone through a lot, Will. Is there anything that I did not touch on that you'd like to mention to everybody out there?
Yeah, we touched on a lot, but I think I just kind of summarized it. There's no reason. If anyone's telling you that you make a lot of money and just pay a lot of money and accept it, be happy with what you got. That's somebody who really doesn't have your best interest in heart. Just reach out to me. You can email me or give me a telephone call. That's on the screen. I appreciate you sharing that, Brian. And I really love what I do. We all do. It's a great company with great people, and they sincerely just want to help any way we can. And it goes even beyond tax savings for my clients. And they're looking for a new home. I refer them to a great realtor I know. It's just anything I can do. If you're just inclined to help people, then this is a great place to be. So we're very, very happy.
I was privileged enough to get to come out to see your new location. The place is beautiful out there.
Yeah, thank you.
And you guys keep growing, and it's exciting to see it. I remember when you were in the old building, and half of it was empty when you moved in, and then you were busting out of the seams when you were leaving. And now you're doing the same thing all over again.
Yeah, we got a little extra room to grow, and we'll get there. We love it. Again, it's just a part of the challenge. If you're not looking forward, then then you're falling behind. And that's how we feel. It's like you said, it's just give us time. We want to help as many people as we can. We'll get there.
That's awesome. Great. Well, thank you again for being on, Will. And thank you, everybody, for joining us tonight. We do this every Tuesday night, again, with the exception probably of next Tuesday night, but we'll see. We might slip in a quick show. We'll see how that all plays out. But if you'd like to be a guest on future shows, please reach out to me. You can find my information at pharusglobal.com. We're here live at 5 every Tuesday night. And thank you all for joining us. And we look forward to seeing you again on the next show in the future. Will, happy holidays and have a fantastic Happy New Year, my friend.
You too. Happy holidays to you and your loved ones, Brian, and everybody there over at Pharus. And Happy New Year to you all. Everybody stay safe and continue to be optimistic. Good things are just around the corner for everyone.
Absolutely. Love that. Happy holidays and Happy New Year to everybody out there. Have a good night, everybody.
Good night.